registration. In case anyone who wants maybe, the video in future, you can always let me know and I can be able to send you the video. And another thing is I always take these videos and put it on the YouTube. If you want to maybe go back again and look for what we discussed, what we were talking about, you can always do that. Send the link and you can be able to check it out. Probably maybe I should just send the link quickly so that anyone who's gonna be interested in actually, check it out, all the videos that we've been doing, all the presentations that we've been doing. All right. So last week we were talking about, I don't know, those who were in last week on Friday, we were talking about the web analysis that we just introduced on our back office, whereby they have the entry point, they have the exit point, they have the check profits, and we try to show, guys, that you can be able to trade using this even without paying a mentor a certain amount of money. I know a lot of people buy signals, some they pay mentor for mentorship, things like that. So to avoid maybe, putting a lot of money, some money you're putting on a trading account, some money you are actually, trading, you're actually paying a mentor. It become a little bit of a challenge than to have free analysis that you can be able to actually, use it and trade. So that was the discussion of last week. We even go through in terms of how we can analyze on our own without using those analyses, or how we can take those analyses and implement it on the market, right? But this week, I really wanted us to to check on indicators. In fact, this week, maybe 2 weeks from now, I wanted us to look on the indicators. So the indicators are one of the instrument that you can be able to use to identify a certain position for you to be able to enter in the market, whether to buy or whether to sell. Remember, the most important part when it comes to market is just to understand where we can be able to enter, where we can be able to enter in the market and where we need to exit in the market. Once we master those entry point and the exit level, that's where it will be way much more better for ourselves, for our trading. Even if monitoring, will be able to monitor our trade properly because we know we enter in this level and it's exiting this level. One of the things that gives you those indications, there are indicators. There are different types of indicators that we can find in a market that you can use. But now we're gonna go maybe indicator by indicator, bit by bit, and explaining a little bit of more further going forward. So today we are looking at the Fibonacci. It's a Fibonacci indicator. I just wanna ask anyone if there will be anyone in a group who think he knows the Fibonacci indicator and how it works in short. Is there anyone? Anyone who knows how Fibonacci indicator works and how it can be able to be to be used in a market? Anyone who can give us just a little bit of idea? Remember, guys, it's always nice if we all of us engaging each other, so that it shouldn't be the one-way conversation. It should be the conversation where we're learning, and whether you're wrong or right, there's no such a thing as a wrong answer. It's either it's wrong, but you learn from it, or it is the right answer. So is there anyone? You can unmute if you know what Fibonacci is and say something, or you can write on the chat. 2 options. Okay, going once, going twice, going 3 times. Sort. All right, cool. So what it means is that all of us, we don't know what Fibonacci is, and we don't know how can we be able to use it. All right. So let's take note about what we're gonna learn today, and eventually maybe we can try to implement it, in our market and see how it's gonna be able to help us. So in trading, the Fibonacci is the common term that almost every forex or stock traders it's equated with. So if you're a trader, you should be able to know this word of Fibonacci, because most of the traders, they always talk about the Fibonacci. Maybe they talk about the Fibonacci as the scoring word so that they can confuse other traders, or other followers, so that you shouldn't know what exactly it is, right? But it is just an indicator that we're going to go through it and we'll be able to understand it. So if you are a trader, you must have had a stock market analysis on the TV channel suggesting that the stock is trading around some of the Fibonacci levels. I'm not sure how many people here who are a trader who really want to take the trading to another level, who actually be able to watch the trading channels on TV, or maybe the economic channels on the TV or on the internet. I'm not sure if there's people like that, but I'm not gonna lie to you. If you really wanna be a really, really good trader, you need now to start getting information in every source that you can. You can even watch CNBC in the morning. It does tells you that the market right now is trading on a Fibonacci level point. It does tells you about the market, what is going on in the US, what is going on in Africa as well as a trade. And this is what is going to give you the idea, even moving from the Forex itself and get to the stock exchange where you can invest yourself, the money, into buying a stock. Right now, I'm not sure if there's anyone who knows how he can be able to invest in stock and buy a stock, have a share on the stock, right? In order you to understand these things, we need to follow where these things actually, coming from and where it's actually being taught almost all the time. So in trading, the Fibonacci retracement tool, which is the most common of all Fibonacci tools, is an important technical analysis tool that uses the horizontal lines to indicate where the support and the resistance are likely to occur in future. Here's what we are looking for in a Fibonacci. It's just to know where the support and the resistance is going to happen in future. Now, the key point here to support and the resistance is very key in Forex, because when you talk about support and resistance, we're talking about how far the trade can go and how far the trade can go all the way down, right? If we identify these key levels that we think the market will go to this level, and if it has to drop, I think the market will go to this level. This will be way much more, a key point, because you are trading at this gap. The market can go at this. This is where you can put your take profit, or the market, if it's reversing, this is where you can put your stop loss. So this is where we're much more important to understand how exactly the Fibonacci, retracement tool, it's all about identifying the support and the resistance. The retracement level are calculated. Retracement level are calculated using the Fibonacci numbers sequence, and they are usually expressed as a percentage of the preceding price swing, with the common level being as 61.8%, 38.2%, and 23.6% retracement level. These are percentage where if we put the Fibonacci indicator on our chart, we will see this percentage. So we will see 61.8%, we will see 38.2%, we will see 23.6% retracement level. When it says retracement level, this is where it's gonna turn. Pretty much, we're not gold. We don't know how this trade will turn out, or how this direction of the market will turn out, but pretty much it will turn in this percentage level. So if you put your Fibonacci indicator on your chart, this level will pretty much indicated on where the market was retraced, whether it was from before, but it will still indicate where the market actually really retraced, turn back or form a different candlestick or break the retracement level to up or down. These are key levels. So these are called the key level of trading. They always say, look at the key level and focus on the key level. These are the key levels. If you don't focus on this key level, what happens is you're not going to monitor the trade on a key level. You've been making all the way. Have you seen that situation that you've been making all the way money? The trade goes up and you think you like, let me just leave it. Maybe I will make more money. And then it gets at a certain point, start dropping again. All the profit that you've been made, it's gone. It does happen again, same. When you are losing, cause you lose, you actually wanted to close that trade. But because of, you had a hope, you leave it, it touches on a retracement level, it come back. It means it touches at these points, 61%, 38%, or 23%. These are the points that actually, it touches. We're going to see it on a chart, exactly how, you can be able to implement it on a chart as well. So you can use this level to determine your entry point, right? As well as your stop loss and the profit. Remember what we said. The reason of having these indicators to just identify where we can enter in the market and where we can be able to stop and where we can be able to put a take profit. I was trading with other ladies and they always ask me, where should I put as a take profit? Where should I put as a stop loss? You see? So I need people to get on a level where on your own by just looking at a chart that this is a take profit if I want to go this direction. This is a stop loss if I want to go this direction. Fibonacci will be able to assist you through monitoring at these numbers. These are retracement key levels that we can be able to monitor. If you have any question, guys, please, you can be able just, write on the chart. And yeah, I will answer immediately, or you can unmute and ask. So things that we should know about the Fibonacci tools. In trading, the Fibonacci refers to the set of the technical analysis tool, such as the Fibonacci retracement, extension tool, Fibonacci expansions tool, and Fibonacci arcs and the Fibonacci fan. So in a Fibonacci, as an indicator, there's a different of Fibonacci indicators. Although all of them, they have the numbers, but the numbers are different. But all of them, their aim is either to see the support and the resistance, where it retrace, or to identify the trend of the market, right? So you will find the Fibonacci retracement. You will find the Fibonacci expansion tool. You will find the Fibonacci arcs. You find the Fibonacci fan, which use as a unique ratio derived from the Fibonacci number series to identify a special price level and a period that may have an impact on the price movement. One interesting thing about the Fibonacci tools is that they lead the price as they identify the potential important price level and the periods before the price get there. This is very interesting. Imagine you have a tool that tells you when the market gets to 28, the market will retrace. That before it gets there, that means you can be able to monitor that, okay, if I'm enter here, I'm monitoring my trade on a level of 28.2%. Once it gets on a 28.2%, there's a possibility that it can retrace or break, continue going with the direction. So these are the key point of the Fibonacci. It gives you the target before the actual market goes there. Remember what we are doing in Forex. We are trading the future movement. We are not trading the current movement, but the future movement. We trade the future movement based on the current setup or the current or the previous movement. So we identifying the future movement based on the previous movement. It's a history. the history of movement, it does repeat itself unless it reaches and break, looking for the different position or a new highs or a new lows. That means next time it might hit again at that level. So when we install the Fibonacci indicators for the previous movement, we're installing it at a previous movement, but the aim is to look the future movement. So it will show you us on a previous movement where it retraces, where it turns back, where it's going, where exactly it breaks, and so on and so forth. Then on a future, we can now be able to know that, okay, if last time the market retraced at a 61.2%, there's a highly possible that the market will go to that position again, and which is money. Just to have that type of knowledge and knowing where it can turn, that's where we make money. That's where we actually take advantage of market and make some money. All right. So the Fibonacci retracement extension tool, when attached to the price chart, the Fibonacci retracement tool draws the horizontal lines at 23%, 36%, 50%, and 61%. Now you can see this one, it's actually different than the Fibonacci retracement. This one, it's a Fibonacci retracement extension tool. That one, it was Fibonacci retracement tool, which is, it has 23, it has 38, then it has 61. This one, they add a 50%. These are the tracement levels where a pullback may reverse to start a new impulse, a swing in the trade direction. So sometimes you can use these two for a retracement of a swing trade. If you are a swing trade, you can be able to use the Fibonacci retracement extension. So it shows where the market pulls back. So when you said the market pulls back, the candlestick shoot up, then it pulls and closes at a different level. Right? It reverses to start a new impulse, close it at a different level, then started the new type of movement. So if you put a Fibonacci extension to, you can be able to monitor at these levels. These are levels where it's going to tell you where exactly the market pull back, where it want to form the new trade. And again, because of we are trading the future movement, then we can now be able to say that, okay, there's also highly possibility the market can turn at this direction. You can use this level in your trading strategy to determine your entry point and as well as the stop level. So these are the Fibonacci retracement. You see it started from the retracement pullback, where it pushes, draw the line all the way, and where it pulls up. Now it tells us, here's the levels, the level of percentage. I don't know, we can't see it clearly here, but I'm gonna go on a chart so that we can be able to see it properly. Then it shows all the numbers of retracement level, where it pull back, here's pullback, here's another pullback, here's another pullback, and where it's forming a different direction. In some trading platforms such as MT4, MT5, and the TradingView, there is a separate expansion tool that shows the price expansion level. This tool traces the pullback swing and uses the size of the pullback to estimate how far the next impulse, a swing, can expand in the trade direction. The expansion level can be used to estimate a profit target. Okay, so they use it estimating the profit target. So why is the Fibonacci using in a trading? Okay, I want to see properly. Ooh, okay. All right. From our discussion so far, so you can deduce that the Fibonacci retracement and expansion tools can be used to predict the potential support and the resistance level market. So these tools shows these levels before the market gets to such levels, so they lead the price. which is very remarkable property because traders want to know what will happen ahead of the time. As we said already, that we want to know what will happen in future. Now we have a minute to New York to NFP. I just wanted to go on a chart quickly. We'll come back and check it out this and finish up again. Okay. Okay, so who is trading NFP? Is there anyone who's currently trading, who want to trade NFP, or who's trading NFP? Okay, I can't even see behind me. Okay, here we go. NFP has just started exactly half past. We can see here it is. This is US 30. Look at the US 30 where it's going. It might come all the way to break here and then going all the way up. Let me look at this one. Okay. Nasdaq. To those who trade Nasdaq, here is Nasdaq again. Pretty much thinking that it will come, it won't go, above beyond this level and goes all the way up. So let's say that we want to trade Nasdaq right now during the high volatility and we want to enter the Fibonacci. We come on it, Fibonacci retracement. You click, where do you want to, from the highest point to the lowest point. Here's the point that we're talking about: 23%, 38, 50, 61, 200. These are levels where the possibility, if you look at 23, this is the level that we're talking about, that it might retrace on this one. If you look at on a 50, it's on a resistant level again, right? So if you want to see a bigger trade, maybe you can even pull it all the way from the highest level to the lowest. Look at the 50% where it is. So you can monitor the trade that I will enter at the zero, but here's the next move where there's a possible 10 that the market can be able to take. Well, we are looking at the Nasdaq, right? Goes all the way up. It can go all the way up to 38. It can go all the way up to 50. Look at where 61%. And because of future movement, these are based on the future previous movement, but it gives us the future movement. We know if we want to enter here as a buy, this is where it's going. All the way, this is where you can put your take profit, take profit, take profit, take profit. If you're going to enter 23%, you can put a stop loss at the zero and then take profit at 50 or 61, or even at 100 if you want to, put that take profit. Okay. I see Mr. Zulu said, I would like to know. Mr. Zulu, what would you like to know? What would you like to know, Mr. Zulu? Before, we go further. Okay. All right. I was just looking on a trade that I had so that also I can see how, the market is going. Oh, beautiful, beautiful stuff, beautiful stuff, beautiful stuff. Okay. All right. So any questions so far? Any questions so far regarding, what we just discussed about the Fibonacci? So this is where the market, I think, is still gonna go. Okay, let's go back to the presentation. All right. Okay, so we only left with the 10 minutes to finish up on the presentation. We were on, I think we were, why is Fibonacci trading? Okay, we got on there. How does the Fibonacci work in the trading? So to those who don't know, when a properly attached to the price chart, the Fibonacci tools work by identifying the possible level where the price may reverse. Since the price may reverse from those levels, they are regarded as an area of support and a resistance. So those levels that we saw on a chart, those are the levels that we're talking about. They are actually regarded as support and a resistance. The Fibonacci tool identifies also these levels by drawing the horizontal line at a certain percentage of the preceding price swing, where the price might retrace to before reverse. In the case of the Fibonacci retracement level, or in the case of the expansions of Fibonacci expansions level, where the next impulse swing might actually, happen, might actually gate. So it's always important to actually monitor the levels of percentage when the market start, whether it's going all the way up or whether it's going down. So the sequence of Fibonacci starting from way back, didn't want to go to all those numbers because I know sometimes numbers, they are confusing if I put a lot of numbers. So a sequence of numbers starting from 0 and 1 that steadily increase, and where each number is equal to the sum of the preceding two numbers. So it's just showing that the system of Fibonacci, to put it on the market, it actually started long ago from just the mathematicians, and the traders, they use the same type of method to actually implement it in a global market. Okay. All right. So what is the Fibonacci spiral? So there's another Fibonacci called the Fibonacci spiral. The limits of squares of successive Fibonacci numbers created a spiral known as the Fibonacci spiral. It follows the tens by constant angle close to the golden ratio, and it's commonly called the golden spiral, right? The number of the spiral, it's actually pinnacles Fibonacci numbers, as is the number of the petal in each layer of the certain flower. In a spiral-shaped plants, each leaf grows at an angle compared to its predecessor, and the sunflower seeds are packed in the spiral formation in the center of the flower, in geometry governed by the golden ratio. So the Fibonacci spiral, they actually put example as the sunflower tree, that whenever it grows, it forms the leaf around the seed inside. So forms another leaf, forms another leaf, forms another leaf, and keep growing. But the seed of sunflower, it's actually inside, in the middle of all those that are being formed. So these are the similar system, how it works when you use the Fibonacci spiral. So maybe we're gonna be able to look at it if we still have much more time to see how the Fibonacci spiral, you can be able to use it, on your charts. So there's effective ways of using the Fibonacci tools. The Fibonacci tools particularly retrace and retracement and extensions are some of the most important tools at a professional trader disposal. So if for professionals, they actually use most of the Fibonacci retracement, or the Fibonacci, fan, or the Fibonacci expansions. So the Fibonacci fan is comprises of 3 lines set at the center of the Fibonacci retracement numbers. So the numbers are 38%, 50%, 61%. They are very often the main support level on the Fibonacci fan as well. Is the 61%. By applying the following rule, we might have a good chance of an entry puring the based on the Fibonacci fan. All right. So these are just showing that the Fibonacci fan also you can be able to find it on a MT4, you can find it on a MT5, and you can assess it directly once the price breaks the 38% level. It will usually go all the way to 61% level. We can make an entry at 38.2%, aiming to close at 61.8%. These rules works best in the trading environment, but it can be also be used in a counter trade involvement as well. So these are Fibonacci fan. So because of we only have 5 minutes left, I would like to go on the chart and maybe just to show each other the different type of Fibonacci's. So we're gonna go for a different trade. Let's see, maybe we go gold. Oh, God, hey, God is moving. USDT shooting up. Massive, massive, massive. All right. So what I'm gonna do, I'm gonna take it out these lines, because these lines I draw it on my own. I don't Fibonacci, it's on my head already when I'm trading, so I can be able to identify all these support and the resistance. So gotta zoom in a little bit. Now, when you come to inside, you can see here it says indicators. All of these, they are indicators that you can use. All of these, they are indicators that you can be able to use in the market and be able to use it on your advantage. But because of today's the first one, we choose this one first to start with the Fibonacci, which is a very, very nice tool to actually use. So we're gonna try Fibonacci retracement. You click Fibonacci retracement, you put it a point from all the way at top, draw the line to the bottom. Is that the lowest or this is the lowest? Okay, this is pretty much the lowest. So as it says, if it breaks here, if it breaks at 38%, the higher possible level to go again, it's a 61%. So if let's say you enter a trade now, right? You enter, maybe you say a buy. Market goes all the way, get to 38.2%, right? If you don't want to close, wait for it to break or to reverse. If it's reversing, then you can close. Can enter another position, you know it's coming on a 23%. But once it breaks, the signs it says it's gonna pass the 50% and goes to 61.8%. This is a very, very nice tool to actually, practice it time to time, even on a demo, because of for sure once it breaks, this is the next possible move that it will actually reach. And that's really important, to know where other moves. So imagine if you enter here, you can even put a stop loss at a 0. Means if it will come and reverse this side, or you can put a stop loss at the middle here. But look at it, it's already breaking on 23. This is gold. Gold, it's on a massive 10. So breaks already on a 23. Looking maybe for this level. But according to the way we see it on a 4-hour, this is the level that it has to break. Maybe looking for this level of 38%. So this is the Fibonacci retracement. We have a minute left. maybe I can show one more. Okay, let's go USD ZAR. Let's look to Fibonacci fan. Right? Fibonacci fan. Let's try now, take it from the bottom all the way to the top. Here we go. These are again the zone. 50% zone. Once it breaks on a 50% zone, we know for sure it's coming on a 61%. So you draw the line on that 61%. You know that if it comes all the way, it comes to this level. You can use even, remember we draw it from bottom all the way up. We can even draw